right, you're 2 to 3 years into your journey, you know how market structure works, you know how the technicals are, what can we really do to push you to the next level? One of the main topics is actually the strategy itself, right? We've all been there. You place a few trades that meet your rules, you're in a losing streak, and now you're sort of thinking, right, I need to find a new strategy, right? If we break down what the strategy is, all the strategy does, very simply, is it says, right, can you place a trade and can you not? I would argue that's the easiest part of the trading process. Trading's not easy, but I'll make the case that that part of it is the easiest thing. What you need to hone in, what you need to focus on is your market view, the asset class which you're trading, the context of that market, and the timing. Those are the key things, right? You can have a market, let's say the yen pairs a few months ago, sky high, years, right? We had a view of the market. Commercial selling was very much there. So we had our view of the market, want to be yen buyers, right? However, the markets were still in daily ranges, right? So although we had the correct market view, which is to be a seller, because the context of the chart simply wasn't the greatest, that means we're not going to have the right timing. This is not the right timing when those markets were in ranges for us to actually look for any selling opportunities, right? This structured manner, this disciplined approach that you need to have moving forward means that because the timing and the context is not correct, I can't physically move on to the conversation of looking for my trades. I might find an entry that meets my rules to sell at that point in the market, but because I understand the context and the time is not there, I can't then justify a trade, right? So by focusing on those three key things, right? Building your market view. Number one, is it the right asset class? Is it in the right context? And is it the right timing? As soon as you get all three things ticked off, you can now move on to your strategy. The original point I was making is when you place trades using a certain strategy and you might be on a losing run, naturally the thought might be, right, this strategy is not working, right? But in reality, it might be a different thing altogether, right? It might be your actual market view. That might be the issue. So I think, you want to keep things very simple. Absolutely consult some more advanced techniques, tools, seasonals to make your market view even better. But I think just recognizing what the actual trading system looks like, what the actual trading process looks like, and then doing it consistently will not only build the correct experience you need to actually understand how things work, but it will allow you to stay focused, on what decisions you need to make in order to find the best opportunities moving forward. Number one, build your market view, build your market bias. Like I said, what asset class, context, and timing. Once you have those three things ticked off, you can now move on to your strategy, whether that be an intraday trend-based strategy or you're looking for scaling opportunities, whatever the case might be. Like I said, the strategy is simply there to tell you if you should place a trade on or not. And then finally, you can then focus on your management. When should you exit your trade? Should you let it run, etc., etc. So really start to think about how the trading process actually in reality looks like, what your strengths are, what your weaknesses are. And I guarantee you one thing, you have a lot more clarity in terms of what you're doing very well and what you need to improve on. And that will make you a better trader.